Well, good morning. Tony Virtue speaking, Virtue Partners, just with an interim update. When things get a little volatile, it is important we stay in communication. Last week, markets were difficult. Why was that? Well, primarily as markets adjust to higher interest rates, and there's a statement here from the RBA. There's a video that goes for about 15 minutes that I encourage you to have a quick look at. That is pretty self-explanatory. The main things to see is the RBA looking to lift rates, this is the interbank rate, from 0.85 at the moment up to 2.5 at Christmas, an increase of around 1.65. That would take them, 3 or 4 goes to do that. It is an estimate, as I said in my notes there, it's a little bit like driving a car a little bit too fast. You've got your foot on the accelerator and brake at the same time, and a little bit of uncharted waters. So with that as a background, that is not great for shares, not great for direct property until interest rates stabilise. Matter's been compounded a little by quite a shake-up in the cryptocurrency market. By way of guidance, Roy Morgan talks that there are 1 million Australians now with some level of cryptocurrency averaging $20,000 each. Now, if we're to believe the maths, cryptocurrency globally has fallen in value from 3 trillion to 1 trillion. That's $2 trillion, or almost the size of the Australian stock market. Now, it's unregulated, so everyone's on their own here. You lose your money, you lose your money. Some of this is on margin calls. Some of this will create contagion effects on other assets, and this might take some time for this to feed back into the real market there. So that's a minus, and as you can see from the graph there, the whole cryptocurrency market, which we don't recommend. It's not as I indicated, a regulated product in Australia. It doesn't generate any income. Is down 70%. Now, margin loans are normally at about 40–50% for these, so it is an issue that will feed through the market there. In the immediate, as we come to year end, there will be some buying and selling of shares to try to get the capital losses. This year won't be great. I think the way to look at this is over the last 40 years, 29 years have been up, 11 years have been down. So 72.5% up, 27.5% down. Out of this is coming good buying opportunities for those who've got some cash reserves, a strong constitution, and can look beyond the immediate. Best estimates, this volatility will continue until interest rates peak, which could be around Christmas. RBA is saying then they expect inflation to go down next year. Some of this inflation may in fact be transitory. We can see people flying around the world doing trips at the moment, and they're paying overs to do that. We can see labour shortages at the moment, which is driving this. We can see energy shortages in part caused by the problems over in the Ukraine at the moment. So a time for caution, a time to be careful, not a great time to hold bonds, but a time just to be careful, work our way through the next 6 months, and then look for better times in the future there. That's enough for today. We'll be back in a couple of weeks' time. Tony Virtue, when experience pays.